what's up everybody? It's your mortgage expert, Brian McCauley here. So you're looking to buy a house in Dallas, Texas, and you're trying to qualify for a home loan, but you just can't show, can't prove, or don't want to come up with the documents to give income, but you're having troubles qualifying for a mortgage. Stick around. In this video, I'm going to tell you how to work around that. Hey everybody, so we all know the DFW housing market continues to heat up with inventory being thin and things trending towards the election. You know, people are trying to decide what should they do. Should I buy and wait for the refinance boom and rates to drop? Should I wait and see what's going to happen with the election? There's a lot of things up in the air. But one thing that I have seen and one thing that I do know for a fact is that home loans are getting harder to do. There are more self-employed people than ever. There are more cash transactions. There are more crypto transactions. And so what happens is, home loan guidelines are pretty invasive. Your everyday conventional FHA, jumbo, USDA loan, they really want to see a person's W-2s if they're a W-2 employee, or if they're self-employed, they obviously want to see their full tax returns. The challenge is sometimes with the way guidelines are written and the way that people earn money today in society, you can't always meet those requirements. So in pops in this new program that we have, which is a home loan product that does not require any verification of employment. Literally, you do not even have to be employed. If you are, that's fine. We don't verify it, but there's no verification of employer or employment, and there's no verification of any income documentation at all. I know that sounds too good to be true. It's not. We just got done helping a couple families with it, but I will tell you, most people that can't or don't want to provide the W-2 pay stub documentation tax returns default back to a secondary loan, which is a bank statement loan, and that's for self-employed people. So a lot of self-employed people only make a lot of money, but their tax returns just have a lot of expenses and deductions, and so their top line and their gross and their bottom line, their adjusted, doesn't look great. And so obviously the bank usually uses the bottom line after the write-off. So on the bank statement program, if you're self-employed, you can just take all the bank statement deposits, add them all up. We'll probably take 75% of those, and then obviously whatever the total is of that, we'll take 75% of that and use that as income, and a lot of times that can help people qualify. But let's say somebody doesn't want to do that program, or they don't qualify for that program. In comes the game changer and the lifesaver, which is the no verification of employment, no verification of income documents. You literally could have no job. This program is a primary residence and secondary residence only. By secondary residence, I do not mean a rental property, I mean like a vacation home. That's what a true second home is. There is no verification of income. There are no income documentation. It is a minimum of 20% down. 20% down can be your own funds. It can be gifted funds from an acceptable source. There's a lot of flexibility around it, but these are really for the clients that say, hey, I don't have or don't want to give the income documentation that the bank is asking for, but I don't want to sit on the sideline and rent for 2 or 3 years until I get my income correct, till I get my tax returns correct. Because I just know, Brian, over the next 3 years, house prices are going to go up probably 7 or 8% a year, and I would like to buy the house now, make that money on the upswing, and then whatever hardship is in the way, whether it be a tax return or bank statements, whatever it is, I'll get that in line and then come back to Brian and refinance and get a lower rate on a traditional mortgage. So this is a really good strategy for somebody that just says, hey, I want to close fast and easy. I don't want to provide the documentation, or you know what, I don't have the documentation. Let me get on this program. So I want to tell you a little bit more about it, kind of on the meat and potatoes and who it would be designed for. But again, there's a lot of people that can use it, but the most popular people that use it are self-employed people that deal a lot in cash. I've seen a lot of bartenders, service industry people where they may make, $200, $300, $400, $500 a night in tips, but they don't claim all that. They don't have it. They've got a lot of money in the bank, but of course, home loan on the traditional routes, they want you to document all that stuff. And a lot of times you can't document it. So these self-employed service industry type people make money, have a job, but probably just don't show the money. So they just bypass the old school guidelines, stick with this program, get themselves keys on a property, and then obviously figure out a way to refinance after the fact, but they don't miss out on gaining equity and paying down a mortgage and obviously, having something they call their own. So the pros about this program are, again, it can close really quickly. There's not a whole lot of documentation because you're not verifying employment, you're not verifying income. You really just verify the credit score. So you have to have a minimum of a 620 or higher to be eligible for the program. So you look at credit score, you look at credit profile to make sure there's no big derogatories. You got to have a couple trade lines as well that are your own. So that's number one. Number two, obviously you got to have 20% down. You know, with a high risk loan like this, and what I mean by high risk is the investor or the bank that's given this loan doesn't even know anything about the person's employment history, has no idea about their income or their ability to repay. So obviously they want to make sure that that person taking this loan is taking it for the right reasons, but also if they're gonna put 20% down on a property, that person, guy or girl, is not just gonna walk away from that house. So the 20% down is a big ask, but at the same time, you know, it's what they require if you're not going to provide any more income documentation. Third thing, so these are 30-year notes. You can get a 30-year fixed, you can get, you know, a 7-year ARM, a 5-year ARM. There are a lot of options. I will tell you personally, my strategy and suggestion is for any clients that we put on this program along with the bank statement program, their 30-year payments, the interest rates are higher on this specific no verification of employment and the no verification of income. If you take a 30-year note, the rate's gonna be somewhere in the 9s. Now I tell everybody like, oh my gosh, 9%, that's awful. Well, I want you to remember two things. One, yes, it is awful. Two, it's short term, meaning even though it's a 30-year mortgage, I always try to figure out, hey, what is the reason this person has to take this loan? Let's take this loan, put 20% down, get an interest rate of 9, whatever it is, and then I want to come up with a plan after the fact. So within 12 months, what's ever getting in the way of them taking a traditional loan, I want to help them solve that problem, whether it be, again, FICO score, whether it be job gaps, whether it be self-employed, whether it be tax returns, whatever that connector is, I say, hey, let me help you over the first 12 months, connect that dot, get your financials back to a more traditional route. So when interest rates drop, not only do I want to get you off the 9+% rate deal, I'd like to get you back to, you know, 6%, 5.99 at the bottom. Obviously, when the refinance boom is going to happen, I think somewhere around Christmas, probably 25. But for those out there that say, man, 9%, that's just really too expensive. But what's the alternative? Waiting another year or two and burning more money on rent? I mean, the interest rate on rent is 100%. So people that take these loans know, hey, I'm thankful to be able to get a place to call my own, put 20% down. Yes, the interest rate and the payment are higher than they want, but they're still making payments towards the principal, and they're really getting the big thing, which is the appreciation. You know, obviously properties in Texas are appreciating on average in Dallas right now about 6% a year. I can only imagine what they're going to boom to once interest rates get down into the 6s and the 5s. And a lot of people know, hey, I'll take that rate right now. Let me make my money on the upswing during the appreciation boom. And then obviously I will help them get to a place to where they can qualify for a more traditional loan. But the interest rate obviously is high. There's not a lot of companies like ours that are doing these loans. Most will want full income documentation, tax returns, W-2s and all that. And if you have that, great. This program is not for you, but a lot of people don't have that. So as opposed to waiting 12 months, 24 months until they get their tax returns all set up or, you know, get their business all set up. I've got some people that are brand new business owners where they've, you know, been self-employed for 8-9 months and they're making a lot of money. Everything is great, but mortgage guidelines again require a 2-year tax return history when you're self-employed in that new business. So even if you're making a killing, they still wouldn't let you use that income because they're too short of a time. So again, there are a lot of people that can benefit from this program, but it is a small, short-term connector for somebody that can't qualify traditionally, doesn't want to rent, and we're like, hey, take this program if you're looking at a primary or secondary home, do 20% down, take the higher rate, but let's work on a strategy and a solution behind the scenes, which says I wouldn't personally feel good as your mortgage advisor putting you into something like this if you had to make payments more than 12 to 18 months because the interest rate is too high. It's too expensive. But so far, everybody we've been able to put into these have qualified. They're super happy. They get a place to call their own, and any hardship that they're experiencing on the back end, myself and my team make sure and put together a strategy to eliminate that hardship. So when the time comes, 12 months from that time, and interest rates continue to drop, they will have the documentation that they need to qualify for a much better loan, which obviously gives them a much better rate, which gives them a lot more long-term savings when you start getting on the traditional products when rates are obviously at 7%, 6%, 5%, wherever they are at that time in the market. So extremely popular product, a lot of opportunities for a lot of people out there. Not the best terms, but very, very easy to get into as long as you've got 20% down. And again, that 20% down doesn't have to be your own personal funds. They can be business funds. They can be a gift from a family member. There are a lot of opportunities out there. So listen, if you found this video useful, do me a favor, like, comment, subscribe. If yourself or anybody that you know could benefit from this video, do me a favor, share it with them. If you want to talk more in discussion about this home loan product, any other home loan product, or just your home buying or pre-approval journey, do me a favor, reach out to us. We're always here for you. Email us, call us, text us, whatever it's easiest for you. Until next time, stay tuned.